Welcome to this comprehensive guide on sampling risk in auditing, a crucial topic for CPA exam preparation. In this video, we'll explore the concept of sampling, its importance in auditing, and the associated risks. Sampling is a vital technique in auditing due to time and cost constraints. Auditors cannot examine all vouchers and documents in a company, so they must rely on samples to draw conclusions about the entire population. This approach, while necessary, introduces sampling risk into the audit process. We will learn in detail with practical examples in next slides. There are basically two risks in audit. One is sampling risk and the other is non-sampling risk. Sampling risk occurs when our conclusions about a population, based on a sample, are incorrect due to the sample not being representative of the entire population. There are two types of sampling risk. Type 1 risk is all is well but sample is not well, and Type 2 risk is all is not well but sample is well. We will see detailed explanations with practical examples in the next slides. And non-sampling risk means audit risk which does not involve sampling. For example, auditor is not well, so auditor has not observed physical verification of inventory. So, this is not related to sampling at all. Let's discuss Type 1 risk where all is well but sample is not well. Let's take example of a lady buying strawberries in the market. She picked one strawberry for testing out of all, but strawberry she picked is not good while all other strawberries are good. So now she rejects all the strawberries and decided not to buy from this vendor. So her conclusion about the population based on sample of strawberry is incorrect. So this is called incorrect rejection in case of test of details, that is substantive procedures. Now, if we talked about internal controls testing, then it is called under relying on internal controls, because based on sample, auditor concludes that internal controls are not good where actually it is good. So now, auditor will do more substantive procedures based on wrong assessment of internal controls, where actually it is not required. So it is called an efficient audit. Now let's take reverse example, which is called Type 2 risk where all is not well but sample is well. So here lady picked a good strawberry out of all decayed strawberries, and she decided to buy all strawberries from this vendor, but her conclusion is incorrect about the whole population. So it is called incorrect acceptance. So in case of test of details, it is called incorrect acceptance, and in case of test of controls, it is called over relying on internal controls, because based on sample, auditor assessed that internal controls are good but actually they are not. So now, auditor will do less substantive procedures based on assessment, which is over relying on internal controls. This will result into an effective audit. Let's practice this concept in this question of internal controls testing. Following is the table that depicts auditor's conclusion about the internal controls from the sample tested and the true operation of internal controls. There are 4 options. We have to select the right one. Which option is showing an effective audit? Or which option is showing over reliance of internal controls? Or which option is showing Type 2 risk? So Type 2 risk means all is not well but sample is well. So now see, all is not well, that is actual situation which is not operating effectively, and sample is well, that is auditor has selected sample and concludes that internal controls are operating effectively. So you can see that right option is C. Now understand all the options. For example, option A, correct conclusion that internal controls operating effectively. Option B, incorrect conclusion, and it is called Type 1 risk, which means under rely on internal controls. Option C, incorrect conclusion, and it is called Type 2 risk, which means over rely on internal controls. Option D, correct conclusion that internal controls are not operating. So now, auditor is required to do more substantive procedures because internal controls are not operating effectively. Now let's discuss second example regarding test of details. Following is the table that depicts auditor's conclusion about the test of details from the sample tested and the true situation of population. Which option is showing an effective audit? Or which option is showing incorrect acceptance in test of details? Or which option is showing Type 2 risk? So now Type 2 risk, which is all is not well but sample is well. So see actual population which is materially misstated that is not well, and see the sample which is not materially misstated that is well or good. So right option is C. Now understand all the options. For example, option A, correct conclusion that there is no material misstatement. Option B, incorrect conclusion and it is called type 1 risk, which is incorrect rejection. Option C, incorrect conclusion and it is called type 2 risk, which is incorrect acceptance. Option D, correct conclusion that material misstatement exists. Note that type 2 risk is riskier than type 1, which is incorrect acceptance is more risky than incorrect rejection. Comment below the next topic you want, or you find difficult in preparing CPA exams, and I will prepare video on that topic. Thanks for watching full video. Please like, share and subscribe to the channel.